Hey, this is Sasha. Thanks for joining me in today's video. What I wanted to do is share with you some insight on what we do in the Swing Charts membership plan. Now, this video that you're going to see right now is a quick little clip, meaning it's cut, and you'll see a couple of little sections of it from the actual members section. So in the members section, you'll get the full video. In this video, you'll go ahead and see a little cut or trimmed version of it. So if you're interested in joining us to see what we do in the members section of the Swing Charts membership, go ahead and take a look at our website at tradersfly.com. So you can see it's tradersfly.com, and you'll be taken to a site like this. By the way, go ahead and check out some of the freebies we have there. You can download a bunch of freebies absolutely free by going to this area. But if you want to see the members section, go ahead and click this members area right there. And then you can go here and you can check out the Swing Charts, and that'll take you to a page similar to this. Now, just for you guys right now, because we have kind of this deal promotion going on, I want to go ahead and share the love. So you can go ahead and click the Get It Now button here on the monthly plan. And what you can do is go ahead and when you go to the coupon, share the love, all lowercase, apply the coupon, and what it'll do is give you half off the first month for signing up. So again, remember, coupon codes expire from time to time. It's not going to last forever. So as you're watching this video, maybe it already expired. But in the meantime, we try to keep this coupon code active as you're watching the video. So keep that in mind. If you have any trouble or issues, feel free to reach out to us or our team. Anyways, I'd love to see you in the membership section. We really focus in on charts, technical analysis, and you'll get a sample of that here as we go into this video. So enjoy the video, and I'll see you at the end. All right, so first things first, looking at the S&P 500 here. One thing that does concern me a little bit is we've been going up quite heavily and quite fast. I guess people really like, market-wise, people like that Biden will become president eventually here shortly, as long as he can get through, January and all that good stuff. So the market likes that because things will be more stable, because when Biden is in the office, and then the Republicans still control the Senate and House and all that, there'll be kind of basically nothing's going to change with the market. Their policies won't get through. It'll be much more difficult for Biden to pass a lot of things. So anyways, the market likes that type of stuff because there's stability, there's balance of power, and that's the point. It doesn't matter where you are politically. Point is there's kind of a balance of power. Market doesn't like uncertainty. We are now more certain about the election of what's to come, and things it looks like not going to change much over the next at least couple of years. So that's what the market likes. So you can see the market shot up a little bit through that news. And then today we are shooting up even further due to some coronavirus news. So again, it doesn't really matter what the news is, because it's not just one thing that makes it move or makes it happen. But the point is that's another thing that fueled the further higher prices. Now, I do think that you need to be a little bit more careful and cautious with what's going on and what's happening here. And that is because when you're looking at this and you look here, let's see here, SPY, when you look at this, we're just a little bit too far extended. Like if you take a look at maybe, let me see here, I got Bollinger Bands, we're a little bit at the upper end of our price range. So be a little bit more careful. Here's the other thing that does concern me a little bit. When you start looking at things like Amazon, right here, let's just do, what is it, General. These stocks aren't moving as much. Even Apple, they're not participating in this rally. So when you look at these big companies, they're dropping down and they're not participating as heavily as some other companies. So even though the market, meaning the SPX, is moving higher, a lot of the big companies that you would think are leaders are not. So that's another level of concern. Oftentimes when that happens, usually everybody else follows, which means you'll get a sell-off. But I don't know if that's going to happen here in this case. We'll see. Anyways, let's just take a look at some of these things. Okay, let's go to DKNG. If you missed this one before, in the US, they're big on sports and all that kind of good stuff. So if you missed this one before, note here, we're kind of at this level. So this was right there, your support. And right here, also another support. Here's a bit of trouble, bearish volume, but right now we're getting right into support. And you can see also, we're getting right into resistance right here. So be careful at this point. However, stock has pulled back quite a bit from the highs, and it could be a better value buying opportunity for those that missed the move. So for now, kind of at this lower level, that's not a bad spot. You're kind of at the lower end. You do have some overhead resistance here, right here at 60 that you may want to keep an eye at. You also have some overhead resistance, maybe around, also around 56. That could be another area or problem. But beyond that, you know, the stocks did quite a bit of a pullback. You do have some bearish volume there. But now if you can hold that 35, that will be nice. So 35 seems to be a nice and decent, so it should be a nice support level for now. So kind of watch that level and see how those things kind of play out. So right now I'm just neutral on the stock. I just look at it lightly. I wouldn't jump or dive into it too heavily, like you know, head first or anything like that. But you know, take a little breather, take a look at it. You could always pile into some shares a little bit at a time. All right, what else we got? We got Etsy. If we look at the daily here on Etsy, you can see we brought it down, bring it back up. A lot more volatility. If I look at the weekly in Etsy, you can see here about 100, kind of that support level. You also see some highs around 150. If you look at the daily, you do have a little bit of some whipsaw action here going on. So basically, if you're looking for a shorter term, here's kind of what we're looking at. You'll note a few spots right here where we're crossing support and resistance levels. So here, that's where I'm looking at it for the support, and that's why we're holding it here. Some of the overhead resistance, and then down here where we held some support. So it's a little bit minor, but it's not bad. So stock dropped again, but volume is picking up, so that could be an interesting thing. You do have some overhead resistance at around 150. Yes, we did pass 150 a little bit ago. We passed, but this is confluence. So just understand that's just kind of a meeting point. Really, it's around 150, so it's kind of that range. So if we go, we're kind of at the lower end right now. If we keep going, we got about 20 points from there. So for now, the stock has had a nice short-term pullback, and if it continues to move higher, watch out for the 150 price level. Otherwise, you are in the lower end of things, which is good. And one of the reasons this might have sold off here at the beginning, because let's say people go back to work, they don't have to work on Etsy as much to make some extra cash, but people are now thinking, well, maybe people will actually stay doing that as well. So it could be bringing it back up, because it could just be a good thing for Etsy to have that extra exposure. So point being is that if people do go back to work, maybe this will hurt Etsy a little bit, but you know, who knows? The thing is that if things are positive, the economy keeps growing, that could still be a benefit and boost for Etsy anyway. Okay, so there you go. Thank you so much for watching and joining me in this little clip video. Remember, this was just a shortened clip and version of what we do in the members section. If you want to join us, go ahead and go to the website at tradersfly.com. That way you get insight on, hey, some of the freebies, the get started pages, and join us on the membership section by clicking the members area here. That'll forward you to our members website, and you can go ahead and sign up for the swing charts if it's something that you're interested in. Anyways, thank you so much for joining us. Remember, hit the subscribe button if you're brand new to the channel, or of course, join the mailing list by clicking the link right over here. And that way you get notified as we release other great videos, products, courses, or even live events sometimes on YouTube. All right, thanks again, and I will see you next time.